Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Buick. It's Friday. Happy Friday to you all. It's March 14th, and we just got a couple economic news releases scheduled for today. We got the Producer Price Index. This is the PPI report or index, or the also it's the inflationary numbers for the wholesale division. So it's important, but not a high impact, primarily because sometimes when there's higher cost to wholesalers, it's not always passed on to the consumers, and we kind of look more towards the consumers' numbers. So we'll start off with the month of January. We had a 0.2% increase in the PPI, and the forecast was supposed to be the same thing for February, and it dropped actually. So it actually decreased in the month of February. We got the core PPI. So when you strip out food and energy, which creates the volatility in the inflationary numbers, we had the core. So we also had a 0.2%, where forecast was actually supposed to be up only about 0.1, and again we had a negative number for on the wholesale side of things. So actually we pulled back on inflation numbers. Last but not least, we have the consumer sentiment. This is the uh, survey that's done by the University of Michigan, and we had 81.6 for the month of February, and we had forecast for this one. It was 80.8, and it came in at 79.9. So people are being surveyed aren't feeling as well about where things are at economy-wise and stuff. So this is something to kind of keep an eye on. This is a high-impact report, as it kind of gives us a gauge as to the mood out there for the general public and the consumers out there. So let's take a look at the headline news here. And currently the stock market is down. Same thing as what the reasons are. We didn't this time. We had not good economic news, but the same reasons. The main reason why the stock market's down and where the markets are at, because of the geopolitical concerns with Ukraine, Russia, slowdown in China's in manufacturing, their economy, and such. So this is the main reasoning. And as we've talked for quite some time here, the stock market is in a very high place here, and is due for a correction. So this could be, these geopolitical concerns could be the catalyst that could help, make them go through that correction here. So it's hard to say for certain because we keep thinking maybe we might reach that point, but this is possible. This is a good possibility, as we've been kind of seeing the stock market pulling back and then helping out the bond market. So speaking of such, we'll go ahead and take a look here at what the bond market's doing today. Now we started the day up higher, as you see with the solid red line, and since it's pulled back, and now we're touching off the 10-day moving average. So we finished after a nice rally yesterday at 104.53. We're currently at about 104.47. So as you can see, the markets are very volatile. It doesn't know which way to go. As you can see, the wicks on both sides, where we've had higher and we've also had lower from where we stand. But if we can keep this going upwards and keep this, we could see a nice little trend going upwards and maybe break out of the downward trend and see some improvement in the rates. But so far today, we're slightly down from where we left off yesterday, but not enough to create a price or any change in the interest rates today. All right, thanks for watching, folks. I hope you guys have a wonderful day. And then remember, next week we do get some volatility. We got Janet Yellen's giving her first FOMC meeting and her first press release next Wednesday. So the meeting will begin Tuesday, and then they'll give their announcement on Wednesday. So all eyes and ears will be watching Miss Yellen as she gives her first press release. All right, thanks a lot. Have a great day and enjoy your weekend, and we'll see you guys on Monday.